untimi enkoje bosia wo ho ena ene bank ahodo no nso ensia kan ewo omanfo ho. Bank of Ghana ewo dwumadie poten a emra hye no na saa dwumadie no ne se ne di kan obehwe ama enema bo agina etosum yenu obeboa abo dawuro ahwama sikasem ntotoye agina na de tosum yensa obehwe ama sikasem mpuntuo akoso. Uma yemfa na mako ne di kan no senya enema bo ebeba fam na agina faako na yenyamu ahotoso. Sanya enema menu mienu tono daadaa no ne bo enkoso ntentem na emfa ahokyere emre omanfo eni enwuma ahodo. Ne toso mienu yebehwe ama sikasem ntotoye agina na enya ahoden ewo bra yedi yeni edi sikakrabra ene sikanwuma ahodo no achi. Ye nhyehyeye a ebeboa esi wo hawa ahodo ano senia sika betumi edi akoniaba ewo manfo enwuma ene sikakwabra ahodo na entem. Ne toso miensa se enema bo egina faako na sikasem ho ntotoye egina ne naso a enwuma ahodo tumi nye sika edi ehyem o manfo etumi enyabosia na sikasem etumpon. Senia wenum nyina ebebemunti Bank of Ghana eyan hyehyeye pi a ebi ni se woye sikasem ho emra yede yeni edi sikakwabra ene sikanwuma ahodo no nyina achi na afei yototo omen sika ene akatua ahodo ahonsem yie. Se yebono tofa Bank of Ghana enye sikakwabra keke sikakwabra ahodo no ene nyamenu mienu nyina enim no ene na eso yemie no. Bank of Ghana de ohwe sikasem ho dwadie entotoye so ejina ho ma se obehwe enema bo ebebo didie a ye wono wo yesika no ho na yamboa.
So the Monetary Policy Committee held its 131st regular meeting from 20th to 22nd July 2026 to review recent economic developments and assess the risks to the outlook for inflation and economic growth. This statement summarizes the key discussions and the committee's decisions on the monetary policy rate. So I'll start with the global front. On the global front, the easing of geopolitical tensions around mid-June proved short-lived. The renewed escalation of the conflict has led to another closure of the Strait of Hormuz and triggered instability in energy markets. Notwithstanding these developments, global economic activity has remained resilient, supported by substantial investments related to artificial intelligence, particularly in the United States and China, as well as the drawdown of crude oil inventories to ease supply pressures arising from the conflict. Consequently, the IMF projected global growth at 3% in July 2026, broadly unchanged from the April 2026 forecast of 3.1%. A further escalation of the conflict could, however, weaken the near-term growth outlook. Now, crude oil prices have rebounded above $85 per barrel following the renewed conflict. Together with supply chain disruptions, this is expected to further slow the pace of disinflation across several countries. In response, most central banks have paused their monetary policy rate cuts. Global financing conditions remain broadly accommodative in both advanced and emerging market economies. However, with heightened uncertainty and emerging inflationary pressures, financing conditions could tighten in the near term, with adverse implications for emerging developing economies such as Ghana. Domestically, economic activity remained resilient in the first quarter of 2026. Real GDP growth was 6.4%, driven by the services and industry sectors, compared with 6.2% growth recorded in the same quarter of 2026. The bank's Composite Index of Economic Activity, CIEA, which tracks high-frequency real sector indicators,
pointed to a sustained increase in economic activity. The CIEA recorded annual growth of 13.4% in May 2026 compared with 4.4% in May 2025. Credit to the private sector, international trade activities, industrial production, and tourist arrivals all contributed to the improved economic performance during the period. The latest confidence surveys conducted in June 2026 showed positive consumer and business sentiments supported by optimism about growth prospects, subdued inflation, and declining lending rates. Headline inflation increased to 5.3% in June 2026 from 3.7% in May. The uptick was driven by increases in both food and non-food inflation. Food inflation rose to 3.9% in June 2026 from 3.3% in the preceding month. Similarly, non-food inflation increased to 6.3% from 4.1% over the same period. Despite the increase, inflation remained below the lower bound of the medium-term target band of 8 plus or minus 2%. The June inflation outturn was driven primarily by base effects and a temporary increase in transport fares, following the surge in crude oil prices that was experienced during the period. The bank's core inflation measure, which excludes energy and utilities, also increased in line with headline inflation. In addition, survey-based inflation expectations among consumers, businesses, and the banking sector rose broadly but remained anchored within the target band. Growth in monetary aggregates strengthened significantly in June 2026 compared with the previous year. Reserve money recorded annual growth of 31.7% in June 2026 compared with 2% a year ago. This reflected an increase in the net foreign assets of the central bank and the effect of changes in reserve requirements on banks' reserves. Similarly, broad money supply, or M2+, grew by 28.5% in June 2026 compared with 15.6% in June 2025. The expansion was driven mainly by a build-up in net foreign assets of the banking system. Now, in the money market, interest rates on government short-term instruments moderated. The yield on the 91-day benchmark Treasury bill declined to 5.3% in June 2026 from 14.7% a year earlier. In the same direction, the Ghana reference rate eased to 10% from 23.8% over the same period. Average lending rates for the banking sector also declined to 15.6% from 27% a year ago. In response to the eased cost of credit and stronger demand, private sector credit grew sharply by 41.2% in June 2026 compared with 8.6% in June 2025. In real terms, private sector credit growth stood at 34.1% year on year. On cash basis, fiscal performance in the first quarter broadly reflected strong expenditure restraint amid revenue shortfalls, resulting in better than targeted balances. The public debt stood at 720.8 billion Ghana cedis, equivalent to 45.1% of GDP at end May 2026, from 613.4 billion that represented 42.8% of GDP at end December 2025. The banking sector recorded robust performance in June 2026 with strong asset growth, improved solvency, and enhanced asset quality. The total assets increased by 30.7% to 502.4 billion cedis, supported by growth in deposits, borrowings, and shareholders' funds. Banks' solvency improved with the capital adequacy ratio at 20.4% in June 2026 from 10.6% in June 2025. Asset quality also strengthened, with the non-performing loan ratio declining to 16.1% from 23.1% over the same period. Notwithstanding these improvements, elevated credit risk remained a key vulnerability, and continued adherence to prudential and regulatory measures are expected to further strengthen asset quality and reduce the level of NPLs across the industry. Now on the external sector, the sector recorded a strong performance in the first half of 2026, bolstered by robust export earnings, despite a sharp rise in the import bill due to higher energy and related costs associated with the Middle East conflict. The trade surplus improved significantly to $8.8 billion, up from $5.8 billion in the corresponding period of 2025, reflecting strong growth in gold and cocoa export proceeds. The current account surplus expanded to $5.1 billion from $4.1 billion in the same period last year. The stronger current account outing, together with a larger capital account surplus, strengthened the overall balance of payments position. At the end of June, gross international reserves stood at $12.9 billion US, equivalent to 5 months of imports cover, down from $13.8 billion, equivalent to 5.7 months of imports cover at end December 2025. The decline in reserves reflected elevated energy-related payments arising from the Middle East crisis. Notwithstanding the decline, the current level of reserves provides adequate buffers for the economy to withstand external shocks. In the interbank market, the cedi came under demand pressures in May, but has since recovered. In the year to 17 July 2026, the cedi cumulatively depreciated by 9.5% against the US dollar. In taking the monetary policy decision, the MPC noted that the renewed Middle East conflict and associated disruption of trade routes have reignited volatility in energy markets. These developments could disrupt global supply chains and dampen global growth. Disinflation trends in several countries have stalled as energy prices have risen sharply, prompting many central banks to pause their monetary policy easing cycles in response to emerging inflationary risks. Although global financing conditions remain relatively accommodative, the persistence of these external shocks could result in tighter conditions with adverse effects transmitted through the trade and financial channels of emerging markets and developing economies. The MPC acknowledged that domestic growth has strengthened during the year, as evidenced by robust first quarter GDP growth and the latest CIA outcomes. Positive business and consumer sentiments and an easing credit environment and a significant increase in private sector credit growth are expected to boost economic activity going forward. Continuing improvements in the trade balance and adequate reserve buffers, these are also expected to enhance the economy's capacity to navigate heightened global uncertainty. Recent price developments
indicate that inflation has edged closer to the lower bound of the medium-term target band, driven largely by base drift effects. Inflation expectations and core inflation measures, these have also increased but remain broadly within the target band. The July forecast remains broadly unchanged from the previous MPC round, with headline inflation projected to rise gradually into the target band. Potential upward adjustments in utility tariffs, together with escalating geopolitical tensions in the Middle East and the associated increase in crude oil prices. These present upside risks to the inflation outlook. On the downside, continued fiscal consolidation and an appropriately calibrated monetary policy stance, these should help moderate these risks going forward. Now, given these considerations, the committee, the MPC, by a unanimous decision, maintained the monetary policy rate at 14.0%. The committee judged that the current policy stance remains appropriate to guide inflation into the medium-term target band while allowing time to assess the evolving geopolitical developments and their potential impact on the domestic economy. Now, on the informational note, the next Monetary Policy Committee meeting is scheduled for September 22nd to 24th, 2026. That meeting, as usual, will conclude on September 24th, 2026, with the announcement of the policy decision. Thank you.
Thank you very much, Chairman Dr. Johnson Pandite-Siama. If you've just joined us, this is the 131st MPC press briefing, and we just heard from the chairman the decision of the committee. The policy rate has been maintained at 14%. We are also live on Joy News, Ghana Web, BNFT, Daily Graphic, and of course on all the Bank of Ghana social media channels. So, members of the press, you just heard the chairman of the committee. So let's hear from you if you have any questions to that effect. Thank you. Please, as we do it, mention your name, the media house you represent, and of course, for brevity, let me repeat that for brevity, this is transcribed. And if it gets a bit more long-winded, it gets very difficult for us to put it out there. So simple, straight to the point. Thank you.
Good afternoon, Governor. My name is Joshua Walasi-Amlanu with the Business and Financial Times. So, during the opening of the MPC, you did mention concerns with regards to liquidity, and I don't understand what has been the impact of the CRR that was introduced, that was in May, and also in July. You mentioned that the bank had stopped financing that gold board. What has been the impact so far? Thank you.
My name is Tom Emery from Corporate Guardian Magazine. Just to add to what Joshua said right now, I want to know what has been the impact of the move from 56-day Bank of Ghana bills to 14-day Bank of Ghana bills in terms of your liquidity management. And secondly, so you mentioned, you noticed that monetary growth has accelerated seriously over the past 1 year, from June this year against June last year. Now, under the current circumstances, are you looking at curbing liquidity growth as measured by N2 plus to curb inflation, even though it's below your lower band? Or are you looking at allowing monetary growth to remain heightened to further increase economic growth?
Yeah, my name is Norman Akwahi for the report for Norman Report. Just to add to what Thomas said, Mr. Governor, I want to find out from you what threshold
or evidence, if I will put it, would convince the MPC that this is no longer a temporary normalization? If you look at inflation as it is, that is no more a normalization, but a renewed inflation cycle requiring a policy rate increase. At what threshold or evidence do you need to be able to look at that, Mr. Governor?
Yeah. Please put the microphone. Yes. Okay, let's deal with these ones first. In total, we have about 5 questions, so we'll come back to you. Governor, I think we can take this.
Right. So, as usual, let's start with the last one first. Novan is asking whether this is the end of the cycle. Is that what you're asking? Whether we are seeing a renewed. Well, from the global scene, you are aware that there's a renewed, volatility, in terms of the crisis in the Middle East. At the last MPC meeting, I took the time to explain how that impacts on Ghana through higher energy prices and the likes. What that means is that impact, is expected to continue. We have seen core inflation also picking up, right now. The last MPC session, core inflation was on the decline. So there's been some changes in some of the underlying factors, for which reason we think that policy, has to take these into account. That notwithstanding, based on our projections, we believe that in the outlook, inflation will still fall within the target band. But that again requires that we stay vigilant on the risks going forward. If you ask me about my sense of the biggest threat to inflation going forward, I can give you a number of them. The global risk is the first one. Whatever happens in the Strait of Hormuz, if it turns out to be persistent, as I've always said, that could impact on the outlook. Utility price adjustments, as you know, that also impacts on inflation going forward. So those are the upside risks that the committee considered. But that said, vigilance is the word. And through this policy action, we are taking the action to ensure that the risks in the outlook are properly contained. Then Toma was asking about monetary growth, right? Is that the case? And whether that poses any risk to inflation? Not exactly. The committee took note of the fact that reserve money growth has picked up, and the likes. But at this MPC round, that is not one of the upside risks that we have observed. And you asked about the movement from 56-day to 14-day and the likes. Well, the MPC conceptualizes monetary policy. And then the next leg is to implement that monetary policy conceptualized. And so it is down to liquidity management and how efficiently this is done. A number of tools that we use in doing this. There used to be the 56-day longer dated instrument that we made use of last year. We have moved away from that. Currently, we use the 14-day, and then, of course, there's the overnight as well, the standard facility window. There are considerations to come down further to possibly introduce a 7-day going forward, but we'll let you know when that change occurs. But in all this, what we seek to do is to manage liquidity efficiently. When we achieve that, we are able to attain our inflation objective. And so we continuously assess these on a weekly basis, the liquidity conditions in the system, and we adjust these instruments accordingly. So that is what has been going on. Then the first one, whether the Bank of Ghana has stopped financing the gold board. Yes, I mentioned that on Monday, with effect from July 1st, this month. Bank of Ghana is no longer funding or we are going to move away from funding the gold board, alone, to a regime where we are no longer, running the transaction like the way it used to be. That also means that the cost of those activities, as we communicated, these are quasi-fiscal activities, and so government has stepped in. I believe in the mid-year budget statement tomorrow, you'll hear the Minister of Finance make some statements in that regard. The implications of that, number one, is that it would sort of reduce the pressure on our financials going forward. But let me also emphasize that what Gold Board does is an important part, of our framework on exchange rate management. And so there would be greater efficiency. I believe that the cost of the ASM Gold transaction will go down, and together we'll be able to manage the exchange rate more efficiently. But it will be done as a quasi-fiscal policy, or fiscal policy going forward. Then there was the first question was about liquidity impact. I did not get that quite well. The impact of the CRR, the change in CRR at the last MPC round. Well, it's still early days, but we've been able to withdraw over 12 billion or so. Head of financial markets, about 12 billion thereabout from the system. In terms of liquidity management, we have attained our objectives. All banks are compliant, with that new framework currently. But like I explained at the last MPC round, remember the CRR rate used to be somewhere around 8% or 9% for a long time. And so we are in transition. Ultimately, we will get there. We are aware that a couple of banks, due to their peculiar nature, may have some asymmetric, impact of this policy. We are in discussions with them in that regard. But we are in transition, and we are observing the impact of that. But so far, so good. We think that our objectives have been attained. Then that's all for this round. Okay, thank you.
Thank you very much, Chairman Dr. Johnson Pandit Esiama. Yes, let me take a call first, then Suleiman, you can follow. Thank you. Hello. Yeah, my name is Adnan. Come in. You are not echo. Thank you, Governor. Governor, just back on the gold ball thing, I didn't get you quite clearly. If you stop giving seed funding to Gold Board, how do they get funding to continue their operations? How do you then get to buy something you haven't invested in? Would you buy it on the open market? How do you buy it? And you also understand they may be selling some FX to the commercial banks. Can you please give us a bit more clarity? It will help everybody. And finally, will that complement or substitute your regulatory intermediation, especially with regards to the currencies you do with banks? Thank you.
All right, my name is Adnan Adams. I work for the News Guide. My question is on the private sector credit. I just want to know if the central bank is concerned with how the commercial banks are heavily investing government bills and institutional investments instead of lending to the private sector in growing the private sector. And secondly, Cocoa Board is transiting from the syndicated loan to a local financing model. I'm just wondering of how this is going to contribute or constitute to the disinflation effort, because if they are going to mobilize funds from the local market and again inject it, how is this going to affect your disinflation efforts? Thank you.
Thank you. My name is Suleiman Mustafa, graphic business. Governor, to what extent did the concerns of over exchange rate stability have on the decisions of the MPC? And secondly, you mentioned that the asset quality of the banks have improved and that the banks are doing well, but we know that some of the state-owned banks have their NPLs almost close to 70%. Governor, what is the central bank's assessment of the risk these banks pose to financial stability? Thank you.
Governor?
Yes, thank you very much. Yes, so again, let's go to the last one first. The issue of MPLs. Well, it is true in some selected banks, the levels are still quite high, but they are working on these. We are working with them to strengthen the risk management frameworks and the likes. But as an industry, it has come down. Based on our assessment, the new MPL rate B is what now? It's about 16%, and it's come down significantly. Remember last year at the same time, it was about 23%. So the decline is quite remarkable. We expect it to go down further. And as we always say, remember this is gross basis. This is gross. There's a difference between gross MPLs and net MPLs. The point is that most of them have been fully provisioned. Fully provisioned. So ideally, those should be taken off the books of the banks. However, we do not allow them to just take it off their books. We push them to continue collecting those loans. If you were to consider the net MPLs, you'll be talking about 8%, just about half of what really the gross figure is. Then Sule, you asked about exchange rate instability and how the MPC incorporates that in their decisions. Yes, you know, it's part of our mandate as a central bank. You know, price stability, you know, refers to both inflation and exchange rate, as well as financial sector stability. So yes, it's a core part of our objective as an MPC. But that said, you need to put it into context. The framework we implement currently, we call it the managed floating regime. Under that regime, the exchange rate, the nominal exchange rate is expected to move. As I always say, it's expected to fluctuate. And so if you see changes in the exchange rate on a daily basis, it is just the framework doing its part. For example, currently, what is the exchange rate as of today? It's about 11 point something, upper north of 11.5, 11.6 in the interbank market. In the Forex Bureau, it may be a bit higher. It's just doing what it's supposed to do. The exchange rate is what we call an endogenous variable. And so it is just, you know, doing the adjustment that we expect it to do within the framework. As the MPC, our concern is more on the real movements of the exchange rate, what we call the real effective exchange rate. And that is what we monitor in terms of whether it is misaligned or not. And so that is concerned. But yes, Sule, I agree with you. I mean, excessive nominal exchange rate depreciation can feed it to inflation. And so the framework allows, and I've explained this before, that we focus on excessive volatility in the exchange rate. That one, we act to take it out. And the way we do it, you are aware, we use our intermediation functions, or sometimes, in exceptional cases, we draw on our intervention budget, you know, to stem, you know, excessive volatility, just to maintain its impact, prevent its impact on inflation. Then Cocoa Board, that's a very good question. They've now moved from the syndicated loans to local market financing, and you're asking its impact on inflation. I think it's rather a good one. What it means is they are mobilizing money locally, you know, to fund the purchases, you know, of cocoa for export, which we believe is a good thing. It's one thing we should have done long ago. The reliance on banks to fund Cocoa Board. You know, there's a limit to how much the banks can fund because of their capital base. And so moving to the capital markets to raise some commercial paper to fund Cocoa Board purchases, I believe is the right way to go. We used to have the pre-financing regime, where in the fourth quarter we had that huge liquidity injection on the balance sheet of the central bank. That would no longer be the case, given that this is going to be money that's mobilized within the system. Then someone asked about private sector credit growth. If you heard me right in the statement, private sector credit is actually going up, compared to last year. It's going up quite rapidly. Yes, banks are still investing in government securities, but we believe that we are in transition over time. As rates begin to continue to fall, we will see greater recourse to private sector lending by the banks. I mentioned a number of things we are doing, to support credit provision by banks. I mentioned, for example, the new digital credit we are bringing on board. We are working with banks to strengthen their risk management frameworks, and the likes, to be able to give greater credit. Several other measures we are introducing, we should see private sector credit at higher levels. Then ECO, my good friend, was asking about Gold Board in terms of what we are going to do next. ECO, we are still in discussions with them. From where we are now, Gold Board has a number of choices. Either government takes up its funding entirely, or resort to the markets, the use of the markets to fund it. And then when the markets fund it, what happens to the effects that are associated? We still have a role, but that context is still being discussed with the Gold Board, and I'm sure the market will be informed very soon. You were asking if that will complement what we are doing now. Certainly yes. Certainly yes. Remember last year, the impact on our financials was quite significant. So since then, a number of steps have been taken, and this change is actually part of the reforms, so that we continue to benefit from the activities of Gold Board, but then at the same time, we stem the impact on the central bank's balance sheet. I believe that is all for the second round.
That's all for the second round, Governor. So if you just joined us, this is the 131st MPC press briefing, and the monetary policy rate has been maintained at 14%. We are also live on Citi FM, and at this point, let me use this opportunity to to welcome our observers from the University of Ghana, specifically from the Department of Economics and the University of Ghana Business School. Most welcome to your first MPC press briefing. Right, so next round of questions.
Hello, thank you. This is Moses, also from Bloomberg. Ghana, what is your forecast for economic growth after what we've seen for the first half? And do you think the resurgence of conflicts in the Middle East could have any impact on your outlook?
Ghana, my name is James Eshan with Joy News. Ghana, I want to know, foreign reserves declined to $12.9 billion. One, I just want to understand, should Ghanaians be concerned about the pace of reserve depletion if the geopolitical tension persists? And also, how long can our reserves withstand the external shock if crude oil should go above 115, especially with respect to the fact that you made mention of the fact that energy pressures cause us more than 1 billion decline in reserves?
Yes, good afternoon. My name is Francis Into. I work with the Ghanaian News Agency. First, I want to find out, you made mention that the city has seen a recovery. How long can this recovery be, considering the continuing volatility on the global front? And I also want to find out the updates on the non-interest banking. The last time we met, you made mention that one bank has applied for a license. What's the process so far? And I also know that other banks are in the process of applying. Where have they reached so far? Thank you.
Hello, can I ask a question? I'm Isaac Adu from the High Street Journal. Doc, can you confirm if you have received an application to license the Women's Development Bank? And if you have, at what stage is it? Then also, what's the latest on SG's planned exit from Ghana? The last one is, Standard Chartered has announced its exit from retail operations in Ghana. What's your reaction to that? Thank you.
Right, so that's the end of questions for this round, please. Governor. Yes, thank you.
All right, thank you very much. So again, let's start from the last one, the planned exit of SG Bank. It's on course. This is a process normally. You have to go through a number of stages. We've made some progress. We are in touch with them, and that transaction is ongoing. I would want to leave it there. If you want further details, you may have to speak to SG directly. Then the next one, if we can confirm, which was that? Women's Bank. Well, we are in discussions with government. It's not a new concept. It's something we've been discussing with government since last year. Some approaches have been made. To license a bank, it's also a process. There are requirements, there are reviews, we have to cross-check, some of the data. So we are involved in that stage. I'm sure tomorrow in the mid-year budget, the Minister of Finance may, make some pronouncement to that effect. But all I can say is, for now, we are in touch with them, discussing that issue. Then the non-interest banking, that also is a new innovation we are bringing on board. So far, we have received one application. Yes, you are right. We are reviewing that. We are open to receiving, other applications. They will be dealt with accordingly. And if found to be adequate, we will go ahead to the next stage of licensing. But for now, all I can say is that we are reviewing the application that has come on board. We'll let you know when that review is complete. Then on the CD, how long can these... Well, when you have a global shock, just as any other country, there are a few ways it impacts on your country. Either if you have a flexible exchange rate regime, as we have, the exchange rate may take some of the pressure, or your international reserves may take part. That is just a way of, adjusting to the shock. And so following global shock we've been experiencing since the rate of Hormuz problem is now going to be a permanent one or not. And then the appropriate strategy is now going to be a permanent one or not. And then the appropriate strategy, will be adopted. But for the first half of this year, this is what it has taken for the country to adjust to that global shock, up to this point. Now, Moses, was it Moses? Someone else asked about reserves depletion. I don't think I want to call it a reserves depletion at this point. I remember these were, expenditures. These were, certain expenses that had to be covered. Remember, there was a repayment of a sovereign bond or so, right? Director of Research, there was a repayment of how much? 700 something. There are related, government payments that have to be made, all types of imports that have to be funded. And then the greater oil bills, right, that also have to be settled. And so these were legitimate, uses of the foreign exchange that was done. Going forward, we are looking at ways, to adjust to that shock if it turns out to be a permanent one. Rest assured, our reserves will not get depleted. Our trade our trade balance is still in surplus, right? The capital account is still in surplus. And so what it means is we have to look at other ways of earning foreign exchange. And that will be done. We'll make sure that our reserves level remains at comfortable levels going forward. And that is if the global shock turns out to be a permanent one. The question by Moses, I missed it a little bit. Moses, can you, the forecast for the year, around 6%. Put it around 6% from as at now, around 6%. Well, yes, the Middle East conflict, it will have an effect. I've explained the channels of transmission, right? The trade channel, the energy price channel, and what have you. Let's hope somehow a solution is found. A few weeks ago, we were all relieved. We thought, after signing that MOU, the parties were going to, settle for peace. Unfortunately, things change rapidly. So we are observing by the day to make sure that the gains we have made so far are protected.
Can I ask a quick follow-up question?
Yes.
Yeah, so related to gold board, assuming they start FX auctions, would the central bank participate as, like their commercial banks?
So I mentioned earlier that we're still in talks with both the gold board and Ministry of Finance on the specifics when it comes to, that entire transaction going forward. I will hesitate to give you specific answers as of now. But after we are done with the negotiations, we will now be able to tell you the role the central bank will play going forward. But whatever it is, and whatever relationship we end up with, it will support the framework that we have currently.
Question on Stanchart's planned exit, whether we have a comment on that.
Oh, yes. So as at now, we have received that notice from Stanchart. We have asked them to give us specific details, and we are waiting to receive those details, and then we can take it forward. That is all I can say at this point.
Thank you very much, Chairman Dr. Johnson Attah-Mensah. Before we go to the last round of questions, let me remind you that the chairman of the committee is here with other members of the MPC. And just by way of information, the MPC is made up of 7 members. We have the governor as the chair. We have the first deputy governor, Dr. Zachary Mumoni, who is right here with us. We have the second deputy governor, Mrs. Matilda Santies-Yedu. Dr. Philippa Bredio, too, who is the head of our research department. Mr. Gejon Ablezo, head of treasury, or the head of treasury. Professor Abo is also here, and Professor Festus Ebo Texan. Professor Abo is at the University of Ghana Business School, and Professor Ebo Texan with the University of Ghana Economics Department. So we'll do the last round of questions. Not so fast, not so fast. And again, I'll remind you to be, quite straight to the point and keep out the narratives to a very large extent. Thank you.
Okay, Kingsley, sorry, Ghanaian Times. Governor, I want to find out the value of unclaimed balances of banks being held by the Bank of Ghana. What has been the trajectory over the years, and what is the money being used for? Thank you.
Okay. All right. Thank you very much, Governor. In November 2024, you issued a climate-related financial risk directive asking banks and non-banks and SDIs to develop climate policies. You said the banks should have it on their tables by January 2026 and SDIs and non-banks by January 2027. I'd like to know, with what we recorded in June, when it comes to flooding,
Are the banks adhering to this, and how have they mitigated the risk that they recorded with the policies that they drafted? Thank you.
And then, thank you very much. My name is Justice from the Shinwa News Agency. So, talking about setting up a new state bank. So, some stakeholders have been, clamoring for the central bank to dispose of its interests in some of these state banks. For instance, ADB, and then the other one, NIB, and so on. So, I would like to find out if there's been any discussion as how the bank is going to dispose of these interests. For instance, you have SIGA, which is the state interest and governance agency, which is supposed to be holding the interest of the state in such businesses. So has there been any discussion in that direction as to where and how the central bank will be disposing of its interest in these banks? Thank you.
Governor, my name is McLean. I'm from Daily Graphic. The Bank of Ghana's latest confidence survey shows that both consumer and business confidence have declined for 2 consecutive rounds. What is the reason for this, if you can share with us? And then what is the bank doing to restore confidence? Thank you.
Okay, my name is Bright. I work with Metro TV, finally. Governor, in your answering the reserve question, you mentioned that some of the reserve have been used to pay make some expenditures. Please, are you able to tell us how much is spent on that difference, the 1.2 billion that we are reading as being the difference from the reserve shortfall? And then you say we shouldn't say depletion, but it's rather something else. Could you please explain that? And this is the 3rd consecutive time that the monetary policy rate is at 14%. Is there any, what is the actual reason why we're maintaining it here? What is working and what is not working? Thank you.
Governor, my name is Belinda Annan-Kwanzaa from Weezer TV. Governor, despite the sharp decline in Treasury bill yields and average lending rates, they're still borrowing with businesses, and they say it's very, very expensive. Is the bank satisfied that the benefits of lower interest rates are reaching businesses quickly enough? Thank you.
Yeah.
Just a follow-up.
Please, yeah, no.
Right. Mr. Governor. Well, we'll come to the last question.
We are done. Okay.
Yes,
so I'll pick them one after the other. Why the monetary policy rate has been maintained for 3 consecutive meetings. So our decisions are always based on the balance of risks. There are factors based on our assessment that pose upside risk. There are other factors that pose downside risk. Talking about inflation, talking about growth. So at the end of the day, it's the balance of that those 2 types of factors and where they are tilting towards. That is what informs the decision. And remember, the decision is not taken by just me. There are 7 of us. And so there's a submission by each member. Since last year, we've moved on to, not just a consensus, but towards a majority decision. So the decision is based on what the majority of the 7 members, decide. And then that becomes binding on everybody. So that is why you see the MPC rate being maintained in the last 3 MPC sessions. In the last 2, rather. It's just based on the assessment by the MPC members. Then the question on climate-related, guidelines that we have issued to the banks. As you mentioned, they have up to January 2026 or so in the case of banks, 2027 in the case of banks, and then later on in the case of others. It's still early days. It's still early days indeed. But I agree with you. The experience with the recent flooding, problem proves that we need to take these risks seriously, going forward. And we will do that as a central bank to make sure that the credit decisions that are made by the commercial banks, they always integrate environmental concerns in making those decisions. Then Adoboe was asking about Bank of Ghana disposing of its shares in banks. Well, very much so. I can tell you in the case of Agri Development Bank, we still have some residual shares. Is it about 13% or something? Yes, in ADB. The Bank of Ghana board has taken the decision that we should dispose of, that shareholding. And so with time, I'm sure later this year that will be done. And yes, in the case of NIB, we still have some residual. It's very small, just around 1%, in terms of shareholding. That will also be disposed of. So Bank of Ghana certainly will get out of the space. We are a regulator and will continue to be a regulator in that regard. Then Daily Graphic, you were asking about a dip in consumer and business confidence surveys. Well, the dip we have seen is quite a marginal one. It's just a small dip. You can even see it as, it's remaining flat. It hasn't been significant. Remember the elephant in the room, the global financial shocks that we are contending with. Yes, it is being felt by local consumers and then also the businesses, so it's not surprising. At the MPC, we also take some presentation from the Chartered Institute of Bankers. They also conduct some surveys, very, very interesting survey that they presented to us. We have assessed all those. We believe that at this point, we do understand that any sort of changes in assessments is largely because of what we are experiencing by way of the global shocks. Then next question, I saw benefits of lower interest rates. Lower interest rates are good for everyone. Private sector people can, borrow lower. We are still committed to that. We want to see businesses, access funding, cheaper funding, because then they can expand, they can create jobs. But it's a process. And as you know, as running an economy, you always, you are faced with global shocks, you are faced with domestic shocks, you are faced with exogenous shocks. When those shocks come in your way, you need to adjust to them. And so we believe that by the time these shocks we are facing now edge out, we will see a return to that lower interest trend that we're seeing from last year. Then, yes, there was one question on unclaimed balances. We do have records on those, and probably you can make a case for it. We will look at it. Our legal department will look at it, and then we can respond to you. Because as you are aware, those unclaimed balances, it could be on account of various people. Sometimes these are balances that are belonging to people who are dead, where their families are not aware of, or other people who probably no longer need the money. Who knows? So to give out such information, we don't just give it out anyhow. But I will encourage you probably make a request for it formally. We'll speak to our legal department. And if they so feel, we will attend to you. But yes, we do have records on those. Director of Communications. That's it? Nothing more? Yes, you can.
The climate-related question.
Not so fast, yeah? Hold on.
The climate question, I thought I answered it. Yes. We gave them up to January next year. So it's still early days. We are working with them.
Suleiman, Echo, please hold on. Suleiman and Claude will end. I want us to end it beautifully. So 2 last questions for the day. So I don't want anyone to leave to say they didn't get a chance to ask their questions, just since you've had your fill. So 2 questions to close it for all of you. So Suleiman and Claude will end it for us. Thank you very much.
Governor, just a follow-up on the MPLs. I appreciate the explanations you gave and what you are doing and the industry decline to 16%. But I don't know whether, Governor, the trend that we've observed is that almost all the local banks are rising above your threshold of 10%, while all 6 Nigerian banks fall within your threshold of 10%. Is there a reason why we are seeing this trend? Why Nigerian banks are able to maintain that threshold, whilst all other banks are rising above the threshold? Thank you.
Thank you very much. Thank you very much. Governor, please, my name is Lord Nate. I write for 3news.com. So, Governor, my question has to do with the gig economy. I think 2 months ago you mentioned here that the gig economy is an issue at the heart of the central bank and that you are trying to work around it. Governor, please, I'll need an update on that one. What the Bank of Ghana is doing about this sector. And then also this morning, the BOG issued a statement on the rejection of the coin. Now, Governor, I want to ask about sanctions. When are we to see people being sanctioned for rejecting the coin? Thank you.
All right. Oh, yes. Are we done? So the first one on the coins, well, that is very true. The coins, these are legal tender, right? The notes we issue, the coins we issue are for the payment of goods and services. So long as these are genuine, notes and coins from the Bank of Ghana, and so they should be used and accepted in transactions. As to sanctions, we've introduced some notice, as you mentioned. We think we should educate the public even more. That will be the first step. So there will be some activity in the recent days ahead. In the days ahead, you will see us come out with different programs, just to emphasize the point that the coins and notes, are for the payment of goods and services. And let me also add one practice that we want to discourage. Those who spread notes at functions, we want to discourage that practice. We have, I'm told they call it spraying. We are going to make sure that practice is stopped with immediate effect. A notice has been issued, and we are going to ensure that we enforce that practice is discontinued. Yes, and they call it bouquet and other packages. No. Those practices are not acceptable, and we are going to be emphasizing that going forward. Then the issue about Ghanaian banks, why they tend to have higher NPLs. Well, it is true. It is true. And it's got to do with the risk management or the credit administration kind of frameworks that these banks have. I mentioned that it's one thing the Banking Supervision Department, the head is here, they are doing, to enhance the risk management frameworks for those banks out there. Remember the banking sector crisis that we had. You could see clearly that those frameworks played a role in the case of some of the Ghanaian banks that were affected. So you are right on that observation, but it's something that we are working on very, 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 strongly. Now, just one more you did not ask about, but let me emphasize, which has to do with the recent fraud report that we issued. It is very, very, very concerning. We are beginning to see a shift in frauds to the payments side, the electronic payment side. We are going to be taking a number of measures to contain or to lower that. We want to urge all of you. We are together in this. At the end of the day, it takes humans, to perpetrate these frauds. We are working with the Chartered Institute of Bankers. We are working with the Ghana Association of Banks. We'll be doing a lot of training for their staff to make sure that that human side of it, is discouraged. Then we'll be introducing technology as a way of, reducing frauds. We notice, for example, that the issue of verification is not being taken seriously across banks. They need to verify transactions. For example, the ATMs that banks have should have a biometric, something at the ATM that asks you to maybe put a thumbprint or verify something biometric. At least that ensures that you are the one holding the card, and it's not a card that somebody picked and purporting to be you. So we'll be taking the issue of verification of transactions very, very seriously. We believe that will go a long way to reduce frauds across the banking industry. Director of Communications, I'm done. The gig economy, right, yes. So that is a new and emerging, economy. Remember, we had to set up the virtual assets, regulatory department that, they've passed the law, they are operationalizing the law. You see them very active very soon when we begin to issue licenses. The fintech department that we have, they are also strong on the fintech side, trying to regulate that space. So the gig economy is also dear to us. Remember, some of them are engaged in activities where they earn US dollars, no matter how small. And so they are important to us. They are able to employ themselves at the end of the day, and so they are important. But remember, we are not the only agency that regulates the gig economy. So it's got to take the different stakeholders, right? The ministry is involved, right? What is their name? SEC is involved, Ministry of Communications is involved. And so we'll be working together to see how to better regulate that space and at the same time facilitate the activities that are going on in that space. But let me just take the opportunity to urge, that even though these new and emerging technologies or boundaries or frontiers are exciting, they come with risks. And so we need to be careful when we engage in those, whether you are involved in the virtual asset space or you are involved in some fanciful thing that has come of age. Please, the fraudsters are out there. We are doing everything possible to limit it, but we all have a personal responsibility to make sure that these illegal activities are brought to a minimum. Thank you.
Thank you very much, Chairman Dr. Johnson Pandete-Siama. This is the 131st MPC press briefing led by the chairman of the committee, Dr. Johnson Pandete-Siama. If you've just joined us, the monetary policy rate has been maintained at 14%. The governor was also supported by a team of advisors. We have here Mr. Eric Hammond, Mr. Franklin Belnier, Professor John Gachi. We have Dr. John Kwachi and also Dr. Francis Kuma, all here to support the governor. And of course, the technical team, which is made up of the heads of the various departments that also support the work of the bank. So you just heard the governor. We've come to the end of this press briefing. Thank you very much. And we hope you do justice to whatever you've heard here. No misinformation, no disinformation, just real facts and data as well. Today, we are quite many in the room, so there is a bit of protocol. When we all get up, we'll rise up for the departure of the governor and the advisors and the team. After that, please just let the students move out first. We don't want any stampede. And the lift, would also take time to carry all of us. So students move out first, and my friends for the media will still judge you before you go. So no rush. Thank you very much, Governor, and thank you, the team. Thank you.
We have our chair, Mrs. Matilda Asante-Siedu, with us. Please, let's give her a round of applause. We have Mr. Victor Azuma Mejida, right? Let's applaud him, right? So he is with NPRA as well. So we have as well a representation from the Commissioner for Insurance. We have Mr. Bernard Ohimenba. He just gave the opening prayer. So please, we want to see you. Thank you. Mr. James Kluje Aveji from SEC. Doctor, Honorable. And then we also have Mr. Louis Kwame Amo. Please, let's write. Thank you so much. We also have a good representation here. There's Mr. Wanda Adeto. Please. He's from Ministry of Finance. We also have Mr. Victor Azuma. We've already mentioned that. And then we have a representation from the Financial Stability Department, Mr. John Darty, Dr. John Darty. We also have Mr. Clarence Blay, please. He's with Bank of Ghana. We also have Mr. Desmond Agboga. And then Mr. Emmanuel Asari. Thank you all so much. We also acknowledge the representation from the banking industry, financial institutions, development partners, and of course, the media, members of the media, we appreciate your coming. Thank you. So to formally welcome us, we'd like to invite Dr. John Darcy to give us the opening. Welcome.
Thank you very much. Good afternoon. Oh, I just said good afternoon. All right. Thank you. The Council Chair, Dr. Johnson Pandete-Siama, represented here today by Council Member and Deputy Governor, Mrs. Matilda Santia-Siedu, other members of the Financial Stability Council and their representatives, the Chair and members of the FSC Technical Committee, working group members, distinguished guests, members of the media, ladies and gentlemen. It is an honor and privilege on behalf of the head of the FSC Secretariat, Dr. Osei-Yeboah, to welcome you all to the formal launch of the 2025 Financial Stability Review. Today's event marks the maiden launch of the Financial Stability Review, a flagship report of the Financial Stability Council, which reviews developments in Ghana's financial sector and measures undertaken to address emerging risks to financial system stability. My brief remarks will just highlight the review process of the FSR. The review is the outcome of intense collaborative engagements among FSC member institutions with the initial drafting of the chapters by representatives of member institutions. The initial draft is then reviewed by the FSC Secretariat, followed by a review by an interagency review committee made of representatives of the FSC. The coordinated review ensures relevance of context, reliability of data used, and consistency in style, which are central to the credibility of the report. The final draft then benefits from the review and refinements by council members. On behalf of the Secretariat, I wish to thank the drafting and review teams across member institutions whose work underpinned this publication. I also wish to thank the Communications Department for their invaluable review and design of the report. I wish to finally express our profound gratitude and deepest appreciation to the Council Chair and Council members for their immense support and direction in the publication of the FSR. I welcome you all once again and admonish you to relax and enjoy the proceedings of the launch. Thank you for your kind attention.
Thank you very much. That was very insightful. Up next is the address by the Council Chair, Mrs. Matilda Santia-Siedu. Thank you.
Thank you very much, and good afternoon to everyone. So I'm getting some feedback. Maybe, is this the one I'm supposed to use? Okay,
Never, and I mean never, open a meeting with, "How's work? Hope everyone's doing well." Sorry, can I say something? I'm not 20 anymore, I'm 47. And I just learned a presentation skill that's more valuable than my college degree. I do articulation training 9 minutes a day. Now, my boss asked me for advice. If you want to actually sound smart and take the leadership, train your speaking skills.
But how long does it take to articulate thoughts into words more clearly with articulation training?
How old are you?
I'm 47.
Oh, perfect. By the end of
I think I'll use this. This is fine. Thank you. So let me first acknowledge our council members. Thank you so much for making time to be here. Our technical committee and working groups, members of the media, distinguished guests, ladies and gentlemen, and directors from the different Financial Stability Council membership and also from the Bank of Ghana. So on behalf of the governor, who is also the chairperson for this Financial Stability Advisory Council, I want to welcome you all to the maiden launch of this flagship Financial Stability Review, or what we call the FSR. Now, this is an annual publication of the Financial Stability Advisory Council. It evaluates developments in Ghana's financial system. So it's not just the central bank. Every financial service regulator is a member of the Financial Services Advisory Council. And so this is intra across industry, and it emphasizes policies that have been implemented to mitigate the emerging risks to Ghana's financial stability. Now, our theme for this year is From Stress to Stability, Staying on Course. And the theme reflects how the financial sector has navigated through the twin stresses, which I'm sure you'll all be familiar with, the macroeconomic shocks and the debt restructuring risks over the past few years, to the current state of stability that we enjoy, and the resolve of the financial sector regulators to stay on course, on the course of stability over the medium to long term. But of course, some risks are also beginning to emerge in the outlook, and the financial institutions are all reassessing their business models to adapt to the evolving conditions so we can avoid disruption to the stability that we're all beginning to enjoy. So the question is, how different is this edition from the previous editions? And this has been published since 2020 anyway. So how different is it? Well, for this first, the report captures highlights of the initiatives that the FSC has undertaken to promote financial stability and further develop the financial sector. And I'm sure that if you look at the report subsequently, you'll find more details of this in Chapter 2 of the report. The second notable difference is that the chapter on the assessment of resilience of the financial sector has also been updated. This is Chapter 7, to include the results of systemic risk survey that was conducted. So again, additional information and additional insights to how we're ensuring financial stability and resilience of the ecosystem. Ladies and gentlemen, on the back of the improved macroeconomic gains in 2025, Ghana's financial sector experienced growth and resilience in the year. Total financial sector assets expanded by 23.2% to 647.25 billion, and that's equivalent to 45.1% of the country's GDP. In addition, and perhaps more importantly, the financial sector was more resilient, bolstered by strong profitability and solvency positions across all the 4 financial industries. Various initiatives have been undertaken to further strengthen the financial sector, and will continue to do that going forward. Now, these initiatives include the implementation of the framework of conglomerate supervision, which is aimed at strengthening oversight of financial groups with cross-sectoral activities, thereby minimizing regulatory arbitrage. So what this simply means is that if you have businesses that straddle the various financial services sector, supervision is done jointly, so we can see the total capacity and risk that that entity potentially could be exposed to. Now, following the passage of the Virtual Assets Services Providers Act 2025, Act 1154, the Council has also tasked the Technical Committee to develop a risk matrix for monitoring risks within that space. And this is to ensure that while innovation is encouraged, it is balanced with financial stability considerations. As I bring my comments to a close, let me emphasize that we would continue to collaborate under the auspices of the FSC to deepen policy coordination, sustain the development of the financial services sector, and preserve the country's financial stability. I wish to extend our sincere thanks to the members of the FSC, our very hard-working technical committees and the working groups, and to the Secretariat for their invaluable contribution to this review, and to our broader shared mission of promoting financial system resilience. Let me also thank our collaborators in the Communications Department for making this publication, which is the first of its kind, possible. I thank you all very much.
Thank you too, Madam.
I believe that all the heads who are here with us as council members should join me so that together we can unveil this, the very first published, well, we publish all the time, but this is one that we're actually launching. We used to put it on the website, but now you can see it in a written document. So please, let's stand up, join me, let's share this with the media and formally, please, here's your copy. Oh, yes, FNIC, yes. Finance Ministry, SEC, NIC. Okay.
Do you have a representation?
Deposit Insurance.
I used to be the juiciest peach in the room. I'm not even...
So on behalf of the Financial Stability Advisory Council, I want to take this opportunity to formally launch and declare this document duly launched.
Ladies and gentlemen, so we have the 2025 Financial Stability Review, which has been officially launched today, 15th May 2026. Thank you very much for doing this very beautifully. It's a beautiful document. So I would like again to ask Madam respectfully to give us the closing remarks.
All right, thank you. So, first of all, the copies will be available on the website of all the members, also on our BOG website. And then physical copies are also available for reference. I think it's been a good, short, but very important session. At the end of the day, everything we do rests on financial stability. And this collaboration through the Financial Stability Advisory Council enables us as a country to maintain financial stability. As I'm sure you're aware, those of you who would have been following the news, we just had a press briefing at the Finance Ministry where Ghana was officially announced to have concluded the ECF. I thought that deserved a round of applause. And one of the things that both the Finance Minister and the IMF Director, who was the leader of the delegation, talked about is the fact that we have achieved great stability. But as I also said in the speech, again, what they talked about is how we maintain the stability, build resilience, and advance growth, which at the end of the day is the ultimate reason why we need stability and resilience. So please make use of this document, and hopefully that guides the conversations going forward. As we have also said, the Financial Stability Advisory Council is committed to working to ensure that the resilience is maintained, and that at the end of it, the ultimate purpose of achieving stability is to also achieve growth, so that working with the ecosystem players, we're able to achieve the growth that we aspire to as a nation. So on behalf of the chairman and all the council members, the technical committees, the working groups who have worked tirelessly and continue to work to make sure that our financial ecosystem is stable, let me thank you all for coming, and we look forward to working with you to continue to build the Ghana that we all desire. Thank you very much.
Thank you very much, Madam. Thank you for your leadership and continued commitment in strengthening Ghana's financial stability architecture. So to close us, we have a prayer by Mr. Louis Amo, Technical Committee Chair.
Thank you very much. Please, shall we bow our heads as we pray? Heavenly Father, we thank you and we magnify you. Your word says we should commit our ways unto you, and you shall bring our desires to pass. We thank you for how far you have brought us. We thank you for the successful launch of this FSR. My God, we pray that it will mark the beginning of great things to happen to the stability of the financial sector. We pray for divine wisdom and strength for the leadership of the financial sector to be able to do greater things that will help glorify your holy name. We thank you, Father, in Jesus' mighty name. Amen.
Thank you very much, Mr. Amo. So we'll take some brief photographs. Please, we'd like to have the Financial Stability Council up for a photograph. And then we'd also like to have the principal dignitaries on standby. They are next to take the photograph. Please join Madam. Yes. Council members. Right, photograph. Next will be the principal dignitaries. Please, heads of departments should also be on standby. Technical committee members, please, are you here? Kindly join them now. The technical committee members are joining them now. Heads of departments are next. Technical committee members, please join them. Please give us the best of smiles. Heads of departments, please, you are next. If you are representing your head of department, please come around. Members of the Financial Stability Department, staff, please be on standby too. Secretariat, please, can we have the secretariat join them? Please don't leave. Please don't leave.
I'm not trying to be weird, but my wife would kill to look like you. How do you